DeLynn, this week we're going to do something entirely different in our show. Forget all this mortgage stuff. We're just going to feature a listing at the end of this show, and it could be yours. So maybe it is, maybe it's not. But anyway, if you stick around for the show, you might be yours. Check it out. Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you for joining us today. So on today's show, we're changing it up a little bit.
We're going to change it up a lot.
Changed my hairstyle, so we're changing the show. You know, I had this friend. This is really kind of funny. So she
You have a friend outside of me?
Totally sidelining here. So she just felt this, you know, she found out apparently when she was like in her late 20s that the name that she had been going her entire life, she found like her birth certificate, and that was not the name on her birth certificate. Apparently, the doctors or somebody her mother had this name, and the doctors, somebody mispronounced it. Her name was Shira. I will never forget this. So,
hold on. And this has something to do with mortgages, right?
No, it has to do with change. So this particular, so she changed her name. So because she found out like 28 years later that her name that she had been going by her entire life was not her birth given name, she decided that everything in her life had to change. So she cut her hair and she changed her cat's name to Mr. Potato Head.
Is this a real story?
It is a real story.
How much did her name change? And how did she not know
I can't remember. I think it went by.
How did she get away with that?
I don't know. But like her entire life, she didn't find out until her late 20s. Isn't that
That's funny. You never told me that. You wait
So
till we go on the air to tell me this?
Shara, if you are listening out there somewhere, it's like still one of the funniest stories ever to me. But anyway, so we've changed some things, and we're changing the show up a little bit too. So we're going to give.
We're going to keep you on your toes.
Couple of new things we're going to start doing. We're going to do
every week now we're going to feature a listing.
Yeah.
So it might be yours. So look out for it. We'll do it at the end.
Not until the end of the show.
Yeah, so
Got to
we'll
hang
feature
around.
Listing, and we're going to cover multiple topics and get through as many things because I know we have these firm facts that come in and questions. And I know you're on the phone all day. Doesn't it seem like you answer the same questions over and over
again? I say I'm going to write a book.
Yeah, DeLynn's going to do a tracker now of the number one question of the week.
DeLynn's going to do a tracker.
Because you need another form.
DeLynn's going to say, which one have I been hearing a lot of this week? And this week, it has been a lot of, or in the last couple of weeks, it's a lot about the property and if the property has a well and septic. But we're going to get to that in a little bit. One of the other things that has just recently come up in the news that we did want to touch on because it does affect debt to income ratio, and it has to do with student loans.
Yes, student loans.
Student loans. So we're going to start off with that one. So a lot of teachers and first responders and people like that, there's a program that's out there.
Actually, you know what? For the first time ever in history, student loan debt is expected to carry over from generation to generation, much like mortgage debt does, you know, when somebody passes away, where your debts are passed on because it's become so expensive for education. And
I know some people's student loans are bigger than other people's mortgages.
Yeah, and it does. And it affects, you know, for all of our real estate partners out there that work with us, student loans affect the buying power of people looking at houses. And every loan program calculates them differently.
Right.
You know, FHA uses outstanding balance. Freddie Mac uses a lower outstanding balance, 0.5% of the outstanding balance. And, you know, conventional versus FHA versus VA, they're all different.
And it's going to make a big difference when it comes to calculating your debt to income ratio. So they might qualify for less of a house because of that.
So how many times have you had somebody call you and say, don't worry about my student loans because it's going to be forgiven? Because there's programs that came out When did they come out? They started in like 2007.
Lots and lots and lots and lots of people.
Congress actually passed this to come out where people thought they were going to get relief. But we did some research and found out that not so many people are getting the relief they thought they were entitled to.
So a lot of teachers, for example, and I've done lots of teachers here in the Pasco County area, and they're under the program, or so they believe, that after 10 years, their student loan debt is going to get forgiven if they've worked at a certain school or whatever for that long. So an article recently came out in the Wall Street Journal saying that, now that since 2007, these things are starting to come back, and they're saying, okay, well, some of the statistics, which we thought was pretty interesting.
It's crazy.
So starting out, over 73,000 people have applied for this student loan debt forgiveness because their 10 years is up. So they're like, hey, my 10 years is up. Let me apply and get my student loans wiped out.
And guess how many so far have been erased?
Guess.
It's not many.
No.
Not many. 864.
Out of 73,000.
So all you people that have been saying, I'm going to get this forgiven, I'm going to wait, and they think they're following the program guidelines to the T, it's just not happening. And I know
and this is affecting teachers, nurses, things like that. Some of the things so the program guidelines, government entity, they have to work for a nonprofit, hold a certain type of loan, enroll of one of several specific, here's where it gets tricky, specific repayment plans. Make sure you're on the right one. And they have to make 10 years worth of payments before it gets forgiven. Well, apparently what's happening is some of these student loan repayment plans that people are entering into that they think is part of the program, they're not. So 10 years of their good payments, none of it is counting. So they have to start all over with another 10 years of payments.
So just more red tape.
It's horrible.
Yeah, it really is.
It's horrible.
And I know it's a political thing because that's where it fell apart. When we get government
So I was just going to
involved-
say, so they say, okay, so what happened? Who dropped the ball?
Well,
Guess.
Obama dropped the ball, and Trump hasn't helped. That's all I can say
He hasn't
about
picked it up again.
Exactly.
So the ball is like wandering around the court all by itself.
Yeah, so it's really a shame. So
And even the senior vice president of the American Council on Education said himself, the whole thing is completely messed up, and the law itself, quote, the law itself is a mess. And that comes directly from the senior vice, Terry Hartle, senior vice president of the American Council for Education. So right on from the top down, it's a mess. And they admit it. It is a mess. So if you do have a student loan.
and you think it's going away.
And you think it's going away in 10 years.
And you think that's going to help you qualify for your next mortgage loan, thinking because that'll be forgiven. You might want to check it out, and and that would be a shame to think that you stayed with a program and an employer that long.
And do we have another
just
minute or
because.
so? Because the other thing that we did want to mention about student loans, Barry said we still have to count it, even if it's going to be forgiven, or even if it's in forbearance or deferred right now, all lending institutions, we still have to count a payment so that you know. So just because it's deferred right now and you're still in school doesn't make a difference. We're going to have to factor
And just because your payment's
in.
$30 a month on a $50,000 student loan, that $30 a month is not the number we're going to hit you with for your debt ratio. It doesn't work that way. So
anymore. It used to. You're
it
absolutely
used to.
right. It used to.
It used
Not
to.
anymore.
So anyway, so find out about your student loans before you get pre-qualified for a loan. And, next we're going to get into some things going on with well and septic. So stick around for that and see if your listing is going to be on the end of our show right after this.
Dude, I got this cool.
Consumer advocate, your host, and the consumer quarterback, Brandon Rhymes.
Okay, we're back and we're going to talk about really, really, really fun stuff now.
I do get a lot of questions on property stuff,
Yes,
right? We
yes,
do.
yeah,
A lot of
absolutely
questions
do.
on from our real estate partners out
Yes.
there. Thank you for reaching out to us with your questions.
And we can't make this stuff up.
right.
But we can,
And
but we don't.
but we don't.
'Cause these are real
We
questions.
promise we
You know,
research it.
And I have to tell you, I saw somebody post on social media the other day. They were a realtor, and they really did a great job. And they talk about what they really have to do to get a transaction to the closing table, because people think all that
Oh,
real
I
estate
know.
agents do is write a contract and show up at closing.
Run
to
around
get
with
their
keys.
check. Yeah.
Let me in this
And
house.
it's-
Sure, I have a master
it's the
key.
furthest for the truth, because you know this and I know this. We, and I don't want to get off topic here because there's a lot to cover.
We
on
always
well
get off topic.
well
You know that.
But it can take months, weeks, years to even get that relationship to where you're going to do business with a potential person.
Right.
And you have to work on that relationship and know that they know what you're talking about, and you're going to be trusted, and you're going to take care of them and have their best interest. And I think, and I'm pay a compliment to you. I think that's one of your best attributes, is that people know when they talk to you, when they're done, no matter what, they got to know that you have integrity and you're going to take care of them. And a lot of our realtor partners have that same thing too. They
Right.
work on relationships, and it's not as simple as somebody calls you and says, "Hey, I want to see this," and okay, I'm going to go write a contract. If it were that way, I'd be a realtor, and so would you. But what we do as lenders is not easy either. There's so many guidelines and so many rules for such little details that come up every day.
And changing all the time, which we know you guys know, which is why a lot of you call us, and we really do appreciate your phone calls,
We're-
because that's why we do our lunch and learns every month too, and that's why we do this show, because we want to make sure if you're educated as well in all the changes that are going on, then everything goes much smoother. So thank you for reaching out to us. Thank you for your questions, and keep them coming. And some of them, like I said, that have come up recently is about property. A lot of them come up about
Yeah.
property.
And, I have to tell you one more thing before you go to
Okay.
this thing. We can kill a deal in minutes, and it can take a bank like 4 weeks to do the same killing.
And
I hate
that
to
has
say
happened.
That. I hate to say that,
Because we
but
know there's one going on right now.
yep. And the other side of that coin is sometimes somebody's loan's been at the bank for 4 weeks.
Yes.
And it got killed, and then it comes to us, and then they want us to save it and close it in 10 days.
Yes, I know. I
We
know.
can do it.
I know.
I know. So anyway, let's talk about the guidelines and provisions of well and septic. 'cause
Well
it
and
comes up
septic.
a lot.
It does.
So my first thought is, if you list a property or you have a buyer that's getting a property with well and septic, all the rules are different based on the loan program you're in.
Right.
Conventional, FHA, VA, all have their own
Right.
rules. So my first suggestion is, if you got something with a well and septic,
Call
then
your lender.
call your lender, find out the rules. But conventional should be your first choice. Wouldn't you agree?
Yes.
And why do you think it's your first choice?
Easier.
Yeah, it is easier. It's absolutely easier. Because the only time well and septic are going to even come into really a play is if the appraiser makes a notation on any conventional loan.
Right.
And when we say conventional, we mean sold to Fannie, sold to Freddie, Ginnie Mae. Those are your conventional
Right.
programs. Now, when we go to, what do you want to talk about next?
FHA or
FHA,
VA.
yeah, it's a whole
Eeny, meeny,
different-
miny, moe. Which one should we go to? You want to go to FHA first or VA first?
Let's talk
because
about
those
FHA.
are different.
Because FHA, I think, gets
It's
the most.
the lengthiest.
Yeah, it's the most difficult. So it's the other side of
And
the
there's
spectrum.
there's probably more FHA loans that
yeah,
are done
there's a ton of
on a
FHA
daily
loans
basis
out there.
as
So
opposed to okay.
the big thing with FHA that makes it different is that you're always going to have setback requirements.
Right.
And what that means is that well and septic have to be certain footages from property lines
Right.
and from the drain field. So
Right. So, like conventional, though, FHA does not require a water test, and it does not require a septic test unless the appraiser notates that there may be an issue. That's the only time that an underwriter will say, okay, well, then get me a water test or get me a septic test. Obviously, you guys know they're highly recommended regardless, because of course we want to make sure that, you know, the water is potable, and we want to make sure that remember I had that client as he drinks his bottled water.
Yeah, it's safer. This is way safer.
Remember though, I did have that young girl, that client who was buying her first house, first time home buyer, and she had the septic inspection, and this was not too far from our office, so it's not like it was out in the boonies anywhere. And as it turns out, she had a septic inspection done. Their septic tank had a large crack in it, and it was a $7,000 repair.
Wow.
$7,000. They had to replace the whole thing. And now I know the septic tank itself, I've heard from some realtor partners,
Right.
that it's only like maybe $1,000 or something, but I guess all the connections and everything, whatever they had to do. But anyway, it cost those sellers $7,000.
And
So
it has
thank
to be
God that young
fixed.
girl, realtor, had recommended to her, get a septic inspection anyway.
Right.
Because otherwise that would have been her
And
$7,000
is that something
going out
that
the door.
qualifies for what we call an escrow holdback?
Don't know. That's an excellent question.
So escrow
Yep.
holdback is, and we do them on roofs, we know, where it needs
Right.
to be replaced in order to get insurance or to meet the requirements, and the buyer can't close without
Right,
the roof.
with
So
that.
we make the seller hold back a certain amount of money.
Not every lender does that.
No,
we
we do it.
Just
Actually,
saying.
we were able to increase the price because an appraisal came in
The appraisal
higher.
came in higher.
So I wonder if the same thing would apply. I bet we could do
I'll
an
bet it
escrow
would,
holdback
because this
on
is something that's
septic
large.
if
So
there's a
something
problem.
like that. So, but in any event, they do not, FHA does not require it, as I said, unless the appraiser, and the appraiser didn't note it in this case.
So what
They
does the
just did it
appraiser do? Does
themselves.
he drink the water and go, I don't like it?
I don't know, maybe.
Or do they fill a glass and say, that's not very clear?
But what FHA does require, which is what Barry mentioned, is certain setbacks. It has to be
All right, so we
between
wanna-
the well
Right.
and the septic tank. It has to be 50 feet away. Between the drain fields, leaching fields, and the well, it has to be 100 feet.
What about the property line?
And then the property line, the well has to be 10 feet away from the property line. Residential or
Right.
commercial or your roadway even, it has to be 10 feet from the road or the
And do
property
you
line.
know if it's 10 feet from the house too, I would assume? Like,
Doesn't say that here.
but I would think
but-
that's a property line.
Right.
boundary.
Yes, exactly.
Yeah,
So, so be
if-
careful with those things. And when you take, as Barry said, when you're taking a listing on that, you know, be cognizant
You
of
should
that.
know that.
Yeah.
You should know that.
The lender's going to ask. If
Yep.
they're getting a mortgage, the lender is definitely going to
All right,
ask.
so you know what, DeLynn?
What?
We got more to talk about this. I want to go into VA, but you know what? We got to take a quick short break.
All right.
So we'll talk about the requirements for VA right after this. You don't want to miss this. And we want to see your listing on our program. We got one of those coming up featured right after this.
Dude, I got this cool.
Consumer advocate, your host, and the consumer quarterback, Brandon Rhymes.
All right, we're back with some tips to help our realtor partners now, to help them grow their business and have that, just that educational edge
Right.
on what's required. I mean, if you get a cash buyer, obviously none of this
None
applies.
of this applies.
Yeah, so I know you guys are all dying for cash
Good
buyers.
for you
but,
for a
yeah.
cash buyer. Bad
but,
for us.
But when you need a loan, there's certain requirements that the lenders are going to require. And it's not just It's not us.
No,
It's everywhere.
this is-
It's everywhere.
yeah.
This applies to everybody. So let's finish talking about the well and septic.
Well and
because we got
septic.
into VA.
On a
So
VA loan.
VA is
and-
different. We talked about conventional,
Yep.
the easiest. FHA has the setback requirements, footage with well and septic. VA.
VA.
VA is different again.
So VA, as far as the septic is concerned, they don't have, again, just like with conventional and FHA, only if the appraiser notates that there may be a problem. That's the only time the VA appraiser or that VA will require a septic inspection.
However, I knew there's a catch. I knew
water. water.
Yeah,
They, regardless of, no matter what, they will always require a water test. So on VA, you have to have a water test done.
So that means you just go get some Pure Life.
No,
Put it in a bottle, shake it up,
And I
look
know
at
we
it and
say-
go, it tests pretty good. That's how it works, right?
So here's how. Here's what they require a This is a hard word to say. Bacteriological,
That's not a real
lead,
word.
nitrates,
I'm going to try that in Words with Friends.
and chemical water tests are always required on the property. And this comes up to even if the seller is currently occupying the property. Sometimes
So-
realtors will think, or people will think, oh, well, if the seller hasn't turned green yet, the water's fine.
Yeah, and that's funny.
No, VA still requires
matter what.
a water test. No matter what, they're going to require a water test, and it will have to follow state, or rather county
Local.
guidelines. It goes to local first, local guidelines.
So
Water
if you have city water,
testing
it's
guidelines.
different than county water.
Right.
It's whatever that municipality is.
And
governing your
and you'll
water.
right, and then if there's no local, then it goes to state, and then it goes to the EPA. So it's got to follow somebody's guidelines, and the water test is going to be
And
mandatory.
you know what's so funny? Here's something we learned, like from some of our realtor partners. You can't get a sample as a realtor and
That's what I
drive
was going to
over.
say. Let's talk about how you get that
Yeah.
sample.
So you can't do it yourself. You can order it from the county. You're going to pay a fee.
And the seller cannot do it.
The seller cannot do it. The agents cannot do it.
Cannot do it.
Now, can they send a spouse or a child? Yes, they can.
Somebody non-related to the transaction has to collect. You can also call like the county or a water testing agency, and they will come out and do the collection themselves. But it's extremely specific on how it has to be done. But it cannot be anybody related or going to benefit from the sale of this property.
Wow, so much to know. Over a well that they turn on every day.
Right.
Now, this doesn't apply if the well is just for irrigation purposes. It is for
Right, this is only for
drinking
consumption.
purposes, and so
And the other thing is it's only good for 90 days. So if you
if you
have a
got a test
listing and
done.
maybe a test done, and it it doesn't close for 90 days or whatever, a new one's going to have to be done. So just keep that in mind too,
they
guys.
expire.
Yes.
See?
Yes,
I
yes,
learned-
yes,
I
90
learned-
days.
We learned that today.
Yes.
I didn't know they expired.
Cool
You know
info,
what?
huh?
But when people bring us a loan, it doesn't matter to us because we're going to close it. So it's a
Yeah.
one-timer. I'm just saying. I'm just kidding. All right. So let's talk about, we have our newest part
Our
of the show.
listing.
We're going to feature a listing this week. So
So congratulations to, drum roll, Darla Wright,
Oh,
Future
Darla.
Home Realty. Yay.
So-
Love my Darla. Good person. She's a
Yeah,
supporter
she
of
was
our Lunch
good.
and Learns.
yeah, and
Loves
look at,
them,
and
comes
look
all
at
the
those
time.
5-star reviews she got
I
up
know.
there. So we're going to look at 4206 Boston Circle right now. It's in Newport Richey. It's actually in Mill Pond Estates. Mill Pond is a community right off of 54, right in that Trinity corridor.
Right.
So it's where everybody
34655 zip code.
everybody wants to be. This one's a 3-bedroom, 3-bath.
Townhome.
Yep, it's a townhome. 1,487 square feet.
That's a big townhome.
And the listing price on this is $158,900. So, you know what's nice about Mill
Wow,
Pond
that's
too
really good.
is it's not a gated community, but it's got that community pool with a nice clubhouse. They got a spa. They got the workout room right there in the community, and it's really low cost housing for there. And based on what I've seen in the area, this is below market for listing. So that's why we chose it. Taxes on this place are very low. Taxes on it are only $1,320 a year currently. So low cost
And
living.
does
to
it
be
have
in
the
Pasco.
HOA there? I don't know if it does or not. Those of you who know that Mill
Yeah,
Pond
it's a-
would already know,
yeah,
but
I-
I think it's pretty low. I don't.
I don't know
remember.
what the HOA fees are. I'm sure it's in the listing if you pull it up in MLS. Again, it's 4206 Boston Circle. Congratulations, Darla. I'm glad we've got to feature your listing. Maybe somebody will see it that knows somebody that wants it. And
Let's
we'll
hope
share it.
so. Hopefully,
Yeah.
you have somebody looking.
Yep. So, all right. So maybe if you have a listing you want us to feature, send it over to us. And if we like you, we'll share it. I'm just kidding. We like everybody. We love all you.
We're just going to kind of start pulling them out of a hat. So yeah, if you have something, by all means, let us know.
Let's talk about community events real quick because we have less than 2 minutes left here to cover.
What do
it.
we
But-
have for community
well,
events?
Right now we got a few seats left with WPBA, our nonprofit charity, West Pasco Business Association. If you go on WPBA.biz, you can see this. But we're doing a raised bus trip on May 31st. It's going to leave from Flamestone. It's going to be a lot of fun. 50 people. If you want to network, go to
Got
the
to be
game.
part of that first 50.
Yep.
Those sell out
50
fast.
people generally go. 49 typically come back. That's what I always say. It is
And
a
we
ride
are
to the
not
game. Your
waiting
game
for
seat.
you.
It is a ride to the game.
He's pretty strict about that. He stands at the bus door,
I really do.
counting heads as
Yeah,
everybody
that's it.
gets on.
Yeah, and then we had
Because
a great.
we have left people.
We got our lunch and learns coming up for June. You missed the one today.
June.
Sorry about that.
Sorry if you missed it. June 11th.
June 11th
is
will be our
next
next
one.
lunch and learn over at Carrabba's in Port Richey. So.
It is free, no cost. We always do some good, interesting topic. Again, it's all about sharing information,
Yep.
and if we're all on the same page, then the transactions go much smoother. So we appreciate all of you guys participating in those and learning with us. And keep your questions coming. Keep your
Thank you for keeping us on our toes because we
Yeah.
learn every week too.
Yeah.
And if you don't like the rules, just wait a minute because they change.
Yeah, they do.
Anyway, hey, I don't know how you found our show, but like it, share it on social media. If you got it via email, forward it to a friend who thinks
There you
that
go.
might benefit from our information. So we love doing this. We really do. The mortgage industry is hard. The real estate industry is hard. We love first-time home buyers, and we want to help them get
We
through
gotta
the process.
team up together.
So let's do it.
Thank you all. Thank you for watching. Thank you for sharing. We are today and every day.
Moving forward. Have
We'll
a
see
great
everybody
week.
next
Thanks for
week.
watching, everybody.
Bye-bye.